This is exactly when the stock market will bottom. I have all the details and what you need to know right here in the video, so let's get right into it. However, first off, how would you like to trade one of these guys, 1 penny, in exchange for this, $34? Well, sounds too good to be true, right? It's actually not. You actually can, and right down below in the description of this video and at the top of the comment section, I have a link that'll take you to where you can do exactly that. In fact, I've done it myself. I've traded one of these guys and I got back even more than this much. So it's a special offer that's going on right now where you can deposit just 1 penny after opening up a new account and you will get a guaranteed $34, possibly even hundreds or thousands of dollars with that link that I have right down below. So if you're interested in exchanging 1 penny, one of these guys, for at least $34, make sure to check out that link down below in the description or at the top of the comment section, as it is a limited time special offer right now. Anyway, let's get into it and talk about when the stock market will bottom, and I can tell you exactly when that is going to be. So let's get into it and talk through all the details. So as of right now, I think all of us are very aware that the Federal Reserve is aggressively raising interest rates. As a result of that, we already know that the economy is going to crash and burn. In fact, they've been talking about it a lot lately. We've been seeing a lot of reports coming out on this, and there's actually a lot of talk right now that in the fourth quarter of 2022, that this economy right now in the United States is likely going to fall into a very deep, dark recession. Now, that's the speculation as of right now. But a lot of this is going to be predicated on what the Federal Reserve actually does between now and the fourth quarter of 2022. So, as we do know, with their last few FOMC meetings, they've been raising rates by 75 basis points per meeting. That's a lot. And according to what we know between now and the end of the year, there's a few more FOMC meetings. Well, according to what the Federal Reserve is saying, and according to what their minutes are showing, they're likely going to be raising rates aggressively through the end of the year. Now, again, could they possibly pause, or could they possibly even lower how much they're raising interest rates? Yes, by all means. Do we expect them to continue raising interest rates by 75 basis points every single FOMC meeting between now and the end of the year? Probably not. Realistically, that's probably not likely. Maybe 1 or 2 more times, and honestly, even 2 more 75 basis point hikes would probably even be a little bit unrealistic. Realistically, they're probably going to lower that down to maybe 50 basis points or probably down to the traditional 25 basis points, which is usually what they like to do. But as we do know, with all of this, we are starting to see some cracks in the United States economy right now as a result of the efforts out of the Federal Reserve raising interest rates. Now, why am I putting such an emphasis on the Federal Reserve and them raising interest rates? Because here's the thing. As a result of this, just like I've talked about in previous videos, to turn this economy around and to slow this economy, it's going to take a while. It's like a huge cruise ship going out on the ocean, right? Or a huge freighter out on the ocean. The thing's cruising along, and to turn that thing around, can you just stop it and turn it around like a motorcycle in the street? No, it doesn't work that way. It takes a long time to turn that thing down, to slow it down, to stop, to pivot, and then to go the other direction. Well, that's kind of what's going on with the Federal Reserve and, of course, the economy right now, is that it's taking a very long time to slow this economy down. However, when they finally do slow it down and the thing pivots, then again, the trajectory going the opposite direction, as in down, is going to be a big question mark, as in how far is this thing going to go down? How much is the economy going to contract, right? That's the real question. Here's what we do know about the performance of the Federal Reserve. The Federal Reserve historically gets things wrong, right? Now, this is no surprise to anybody. If you've been following the Federal Reserve or the stock market or the economy for any length of time now, you know that historically the Federal Reserve is behind the curve literally every single time. When it comes down to raising interest rates, cutting interest rates, and doing the right thing, they are literally behind the curve every single time. History proves it every single time that they are pretty much behind. So as a result of that, we can anticipate that they're going to raise rates too fast, too aggressively, they're going to crash the economy too quickly, right? We already probably can anticipate this is going to happen because we've seen it happen before. Well, as a result of that, this is where the opportunity comes in, right? So if you're somebody watching the markets right now, whether it's the stock market, the real estate market, crypto market, all of these different markets out there right now, here's where the opportunity is going to come in. So eventually, believe it or not, even though the Federal Reserve says that they are very committed to bringing inflation down to 2%, I'm going to tell you this much. Good luck, Federal Reserve, because here's the thing. If they bring inflation down to 2% from where we're currently sitting right now, it's going to take a major crash and burn situation with the economy to bring it down that much. I can almost assure you this much. We're going to get down to maybe around 5%, 6%, something like that, the economy is going to be doing such a bad thing, right? The economy is going to be in such a bad situation that they're going to say, just kidding, we're going to change policy, we're going to pause, and guess what? We're going to start cutting rates again. So here's the thing. To bring inflation back down to 2%, I think is a far cry. I'm going to say this much. It's going to take them a very long time, number one, to do that if they want to, and if they actually do want to do that. And number two, if they actually do start moving forward to actually lower inflation back down to 2% is what they said they wanted to do, it's going to cause the economy to contract so much that they're going to bail before it actually gets there. I can almost guarantee it. Now, again, I have no clue what the future is going to hold. Of course, I cannot say 100% for sure, but this is what I foresee happening. Sometime when inflation gets down to maybe around the 5% or so range, again, maybe it's 5%, maybe it's 4%, maybe it's 6%, somewhere in that range, the economy is going to be in such a bad position that they're going to say, we're changing our policy and we'll try to achieve the 2% at some point in the future. But right now, maybe 4%, maybe 5%, maybe 6% inflation is what we're going to need to deal with just to bring this economy back. So it's kind of what we're anticipating. So here's what I want you to pay attention to. The stock market, just like back in 2020. Remember the days of 2020? Early 2020, COVID was coming in, the stock market was falling off a cliff, and all of a sudden we had all of these markets selling off aggressively. What happened? Do you remember that? There was a pinpoint day where all of a sudden the markets fell down, capitulation came into the market, and all of a sudden you got the rocket ship that went straight higher. What happened? Was it a miracle that day that happened? No, not necessarily. It was the Federal Reserve that came out and basically said, oh, hey, we're going to print a couple $1 trillion. What do you guys say about that? Well, the markets know that when trillions of dollars are printed or even hundreds of billions of dollars are printed by the Federal Reserve, where does that money go? Does it go into your pocket? No. Does it go into the pockets of corporations? Well, probably. Does it go into the pockets of politicians and Federal Reserve type people? Yeah, probably. But where does it mostly go? It goes to Wall Street. That's where the money goes. It goes right into the market. So when we saw that back in early 2020 where the market was falling off a cliff and all of a sudden one day, the skies opened up and magic appeared and the market bottomed out and went straight higher for basically 2 years, what happened? The Federal Reserve printed a bunch of money, and we know that that money makes its way into the market. So here's what I want you to pay attention to. When the Federal Reserve gets into panic mode, which they probably will, when they get into panic mode because they've raised rates too aggressively, too fast, and the economy is falling off a cliff and the thing is contracting very hard and very fast, pay attention to what the Federal Reserve is saying. When the Federal Reserve comes out and they announce that they are going to pause on raising rates and possibly cut rates, that's what I want you to pay attention to. These are going to be the key words out of the Federal Reserve. When they come out and announce that they are changing their policy, they're going to be changing their approach, and when they start to cut rates or when they start to pause, first off, let me say this much. When they come out and say that they're going to pause, get ready. Because when they say they're going to pause, it's probably not going to be too much longer after that until they actually decide to start cutting rates once again. Because they've overdone it. They've basically collapsed the economy too much at that point. Now again, could it possibly be happening in the fourth quarter of 2022? It could. Could it happen in the first quarter of 2023? It could. It just depends at what point when we see this economy really start to fall off really hard and really fast. That's when we're going to start to see the Federal Reserve start to scramble around in panic and realize that, wait, their 2% inflation goal is probably out of reach for right now anyway. This is going to be a long game. This is not something that they can achieve in the next 3 months. It's not in the next 6 months. It realistically, maybe in the next year, they can get it done if they continue to aggressively raise interest rates. It's going to take them about a year to get that done. According to the calculations and the figures that I've run on this thing, it's going to take them about 12 months to get this actually down to 2%. Yeah, I'm going to say good luck on that one as of right now. So what I want you to pay attention to is the verbiage out of the Federal Reserve. When they say that they're going to pause, have that as your warning. Have that as your little, hey, they're going to do it soon. Get ready, right? So just like you're getting ready in the market, right? Get ready. When you hear those words out of the Fed, be sure to get ready because they're going to come in soon, probably shortly after that and say, we've contracted too much here, and we're gonna start cutting rates. We're gonna cut 25 basis points here. So when they start doing that, pay attention, because that's when the market is gonna say, great, it's off to the races here, and that's when a bottom will likely be put in. Now, gravy on top, the cherry on top of all this. If the Federal Reserve couples all of this with any type of talk about printing money, or QE is what they like to call it, who knows? Maybe by then they'll come up with some other fancy name. Remember the days of Operation Twist with Ben Bernanke quite a few years ago? All that was a fancy name for quantitative easing, QE. Same old thing, printing money. They all come up with these new fancy names all the time to basically just confuse the people. It's all the same thing. Printing money, that's all they do. They change digits on a computer and they say, Operation Twist. It's called Operation Twist the Numbers. That's what it really comes down to. So if they have any type of talk about printing money, quantitative easing, Operation Twist, or anything like this along these lines where they're going to print money, oh man, get that buy button ready, because here's the thing. The market knows that that money is going to end up into the market. So that is a great, great buying opportunity. Quick side note, full disclaimer, this is not investment advice in any way, shape, or form. I don't know your situation. I cannot tell you what to buy. I can't tell you to invest at all. I'm just some dude on the internet, right? I'm just simply telling you what to pay attention to out of the Federal Reserve. So please pay attention to this. When you hear these words out of the Federal Reserve, get ready. And of course, get that buy button ready, right? So it's about the thing I can tell you. So anyway, this is what I wanted to tell you, because when we hear this type of language out of the Federal Reserve, this is when the market will bottom, just like back in early 2020, when we heard very similar talk out of the Federal Reserve then, and the market took off like a bat out of a cave, or you know what I mean, a bat out of somewhere else, right? So be sure to pay attention to this, because we could see another type of these situations. However, if the market is just basing around doing a whole lot of nothing, that's not going to be all that exciting. We need the market to really fall off a cliff. We need the market to fall fast and hard. We need that capitulation, because that's what puts in those really nice V-shaped bottoms in the market. So when you see that capitulation, when you see that really hard fall in the market, and that's when the Fed steps in and says these magical words, get ready, because that's the bottom. That's the capitulation that we've been looking for, and that's likely going to be the V-shape that we've been looking for in the market. And the thing will likely be off to the races again. And again, maybe it doesn't happen in the fourth quarter of 2022. Maybe. Does it happen in the first quarter of 2023? Maybe. I can't really pinpoint exactly when it's going to happen. All that I do know is it's going to happen. It happens every single time. This Federal Reserve cannot stop printing money. It's like a sugar addiction. When you start eating sugar, do you just feel like, nah, I'm good on sugar. I'm done. No, that's not how it works. As soon as you keep eating sugar, it's so good, you just have to keep eating it, right? You can't just stop one day and say, nah, I'm done on sugar. No, you have to keep eating it, because that's how it basically works, right? The same thing with the Federal Reserve and printing money. It's basically like an addiction, right? They have to continue doing it, because that's the only way that this economy continue to progress as the way that it is, and the markets continue to do as well as they do, is by printing that money essentially and plowing it into the markets, because essentially the economy can't sustain itself. This economy is not that great, right? So anyway, hope this gives you a better perspective on what's going on with the markets, what to watch for as far as out of the Federal Reserve, and when a bottom will likely be coming into this market. Next, make sure to trade your 1 penny for $34. So if you like to trade 1 penny for $34, honestly, this is a better return than you can get in the stock market. So, which by the way, when you trade your 1 penny for $34, you will get it back in the form of shares of stock. So to be honest with you, when I did this, I deposited $100, and what I got back was almost $100 worth of free shares in different stocks. In fact, I even got 1 share of Starbucks, which was $88. Not bad, right? So pretty cool. I even got 5 other shares, which all in total added up to just under $100 total. Pretty cool stuff. I was super excited about it. So anyway, make sure to check out that link down below in the description or at the top of the comment section. You can deposit one of these guys after you sign up, and then you'll get a guaranteed at least this $34 guaranteed, possibly hundreds or even thousands of dollars above and beyond the 34. Anyway, check out those links down below. Again, thanks so much for joining me. I'll continue watching everything closely. As I do get more details, of course, I'll be right here for you, breaking it all down, letting you know what's going on and how you can get into this market or what to watch for out of the Fed and, of course, everybody else. So, again, subscribe down below, share the video with your friends, family, social media, check out the links down below, and go back and check out some of the other thousands of videos here on the channel. Until next time, have a good one. Thanks so much for joining me, and I'll catch you again later.